today we need to talk about revenue and purchases. We already know what revenue is. Revenue is the amount of money you make from selling a product. That is revenue. The amount of money you make from selling the goods you bought. That is revenue. And for purchases are those goods that we bought with the aim of selling them, to resell them. Those are purchases. Stop writing this. Focus. So the difference between purchases and revenue is this. For purchases, we are buying those goods to aim in selling them. That means we aim in selling them. That's why we bought them. Revenue is the amount of money we make from selling those products that we bought. I think it's clear. We purchase either through credit or through cash. That means sometimes we purchase with immediate payment, which is cash or bank, or we buy to have incurred a debt. Do you get the point? Sometimes we buy with the aim of we make a payment immediately. Some other time we buy on credit. So that means we're going to incur a debt, meaning that we have a supplier, a creditor. So either ways, we have purchased goods. So here, revenue, I already said about revenue. Said this is the sale of those goods that the business transacted with other businesses or customers. The sales you make in selling, the sales you have, with transactions you have with other customers, or transactions you have with other businesses, they are all revenue. Then purchases, those goods that you bought with the aim to resell, that is purchases. Now, comparison of cash and credit transactions for purchases and revenue. Purchases and revenue can be bought on credit or cash. It depends on the kind of customer you are transacting with, and it depends on the kind of supplier you are transacting with. I think up to now is clear. Great. So for purchases, for cash payments, that means we bought these goods and we make immediate payments. So what are the effects of such transaction in the double entry? For cash payments, we debit the purchases account because at that point in time we purchased. So goods have come into the business. We debit purchases account. The account which we bought those goods from. That is purchases. We debit it because we purchased into the business. Immediately, because it's a double entry, we credit the cash account. We bought these goods and we paid cash. Cash is out of the business. Goods are into the business. So goods coming into the business is purchases. That is in, which is debit. Cash is going out of the business, which is cash payments, which is what? A credit entry. Is it clear? Purchases are goods we bought into the business. We purchased them. Debit entry. In. How do we get them? We made an immediate cash payment. Out. Cash is going out of the business. Is it clear? Any question about this?
No.
Clear, right?
Yes.
Good. Then, the other way is credit transaction. Here we did not pay cash. We bought it to incur a debt. That means we are having a supplier who is our creditor. Cash did not go out of the business, but goods have come into the business. Out.
It's gonna be the last point.
Yeah, I said here, purchases on credit, we did not pay. We are incurring a debt. That means we are having a supplier at this point in time. Goods have come into the business. At the same time, cash is not going out of the business, but the supplier has given us those goods without making payments. Do we get it?
We're gonna take the best without paying them, but we're gonna pay them after.
After.
But money hasn't gone out.
Money hasn't gone out. So what replaces the cash? Here, we credit cash, right?
Yeah.
Now we're not going to credit cash. We're going to credit the supplier that gave us the goods out without paying. Do we get it?
Yeah.
So, for purchases now, for credit transaction, that's going to be the first part. You debit purchases account as usual, same as this. Because either ways, cash or credit, goods have come into the business in terms of purchases. So you debit purchases account. I think that is clear. Good. Then, because we did not pay, we're going to credit suppliers that gave us the goods out. Credit suppliers account. Is it clear?
Yeah.
Do we get it? This is the top that I'm focusing. Do we get it? Do we get it or not?
Kind of.
This is where we are. The supplier.
Yeah.
Here, cash. This one is sorted, this one is sorted because goods are coming to the business.
Yeah.
Here, cash goes out of the business, cash purchases.
Mm-hmm.
Here, credit purchases. Goods are coming to the business, cash didn't go out of the business, the supplier gave us the product. So we're going to credit supplier's account for the double entry. Is it clear now?
Yeah.
Good. Now, the second part, because whatever you buy, you have to
Return the.
You have to pay.
To pay.
Yeah.
Whatever you buy on credit, you have to pay back, yes or no?
Yeah.
So at that point in time, at that point that you have to pay, what do? That's the second part. You debit the purchases account, you credit the cash account because you're going to pay with cash. And if you make the payment with check, you credit bank account. Is it clear?
Yeah.
Yes.
We get it or not?
Yeah.
Cash or check, they are all going to be credited because they are going out of the business. Not into the business. Is it clear? Any question up to now?
No.
Now, we go to balancing the accounts. For balancing the accounts, at the end of the month, you have to update your system. You have to update your transactions. Those that are owing you, those that you are owing, they have to pay, you have to pay. The book has to balance. So what are those things that you need to take care of during the end of the month? Number one, how much money left in the cash account? So how much, through your cash account, you've been paying and paying and paying, you've been receiving and receiving and receiving. So how much is left? You need to balance it. The debit side and the credit side. So most of the time, the debit side should exceed the credit side. Because the debit side is where the money comes in. The credit side is where the money goes out. So you make sure you balance it. As soon as the cash account is done, you think about the bank account. Because sometimes you would have received check from your from your customers, and you would have paid out check to your suppliers too. The balance in the bank account, the trade payables, who are those suppliers that you are owing? Trade receivables, who are those customers owing you? Yeah, at the end of the month, you have to sort everything. The value of the business assets. What are the assets you have now? Maybe you bought motor vehicle, maybe you bought machinery, maybe you bought equipment. You have to know the value. The amount incurred through various expenses. Amount you have paid. Maybe you bought stationery, maybe you paid for expenses of transportation, and whatever it is. You paid them. I think it's clear. The next one, the how much their inventory hours cost. Your purchases. This is your purchases. Those goods that you bought, that you are selling, how much are they? That's in stocks.
How much
Are they? How much are the cost of your purchases? You sell, right?
Yeah.
Yeah, the value, the figure you have.
Like how much it costs.
You bought goods into the business, right? At the end of the month, you might not sell everything, yes or no?
Okay.
You need to know the value of those goods that are left.
Okay.
Is it clear?
Yeah.
The amount you bought, the amount that is left together. The updated revenue, how much sales did you make?
Yeah.
How much sales did you make? And the last one, the equity. How much money have you invested into the business? How much money have you taken out of the business? Equity is the amount of money you invested into the business. Drawings are the amount of money you took as the owner of the business you took from the business. These are all you have to balance at the end of the month. Do you have any questions about that?
No, but Mister, I have another question
Yes,
about
please.
this. If me and if I credit supplies and we agreed that we're gonna pay him like after a month, that supplies I didn't sell them yet. How we gonna pay him?
If you didn't pay at the due date,
Yes.
then you might be given you might have to pay some interest to the suppliers. because you forfeited the trust the supplier has on you.
Yeah.
There's an agreement on your invoice, the pay day, which that means at the end of this month you have to pay. If you did not pay, you are owing the supplier. The supplier might charge you for that interest by paying interest on that cash you have to pay. Maybe 2% interest, maybe 3%. It depends on the terms and conditions that is on your invoice. Because in the invoice, there would have been terms and conditions.
Yeah.
Do I answer your question?
Yes.
Any question again? Any question? Clear, right?
Yes.